Now, as I've said, this was adapted from May 2023, paper 2 IEB. So basically it is for this year. And you're required to prepare a couple of things there, as I showed you in the previous video. Now we have information relating to GP tool distributors. GP tool distributors is an agent that buys tools in bulk from their only supplier, that is Adendorf Machinery Mart, on credit. Their only sales contract is to supply tools to Builders Warehouse, and the Builders Warehouse stores are spread across the country, making it very lucrative contract for GP tool distributors. Builders Warehouse places bulk orders with GP tool distributors who allow them, that is Builders Warehouse, 60 days to settle their account. So basically when we buy goods from our creditor, we are, well, it's not specified here, but we know that when we sell goods to Builders Warehouse, we grant them 60 days to settle their account. Okay, so they'll pay us within those 60 days, right? Now, part A, let's go to part A. We are given the statement of account from Adendorf Machinery Mart, which is based in Constantia, Kloof, AH. They gave us the statement, and you will note that they actually allow us 30 days after the date of the statement to settle our account, and then they give us 8% discount. Already, guys, there's something wrong there. Okay, there is something wrong here. We are allowed 30 days, but we collect money from debtors. We allow them to pay within 60 days. In the meantime, what money are we going to use to pay our creditors when we have to wait an extra 60 days to get money from debtors? Tricky, isn't it? Okay, now it's taking me back. That is a concern, actually. All right, let's see what they say under additional information. Under additional information relating to creator statement for February 2023, invoice 1505 was recorded in the creator's journal as 161,000. The statement is correct. Now, all we are given is simply the totals of what was in the creator's ledger and the total of what was in the creator's statement, which is what will be the opening balance in the creator's reconciliation. Now, according to the first difference that we found within A, invoice 1505 was recorded in the creator's journal as 161,000. Let me see how much it was recorded at in the statement that we received. It was recorded at 116,000. And according to that question or that information, the statement is correct. That 116 is correct, and we recorded it at 161. So we need to correct our creditors statement by reducing our creditors statement by the difference. 161,000 minus 116,000, we will get 45,000. So we need to reduce our creditors ledger by that 45,000 because we overstated that invoice. It was recorded at a higher amount than it was supposed to have been. Let us move on to B. What does B say? It says that GP tool distributors was unaware of the discount awarded on the 7th of February. Let me go to the statement because that's the only thing we're given anyway. We're only given the statement. We have to work from that. We were unaware of the discount that we were given on the 7th, which is that 24,000. So all we have to do now is to reduce our account by that 24,000 because we were not aware of that. Let's go to C. C says that the credit note on the 26th of February 2023 was correctly recorded in the creditor's allowances journal as 88,400. I will first go to that note, 26th. We recorded it at 84,000. They said 26 is 880, right? 880 26th. Yes, I'm right. Okay. So we recorded it at 84,000. and it was in the creators allowances journal. It was on the debit side. Let me see if indeed it was. For them, it will be on the credit side. It is on the credit side. It's 84,000. We recorded it at 88,400. They recorded it at 84,400. Now I didn't read to the end. Who is right between Eisendorf and us? Oh, they said it was correctly recorded in the creditors' allowances. So it was supposed to have been recorded at 88,400, meaning that they made a mistake by recording it at 84,000. So they need to reduce our account by the difference. You will take 88,400 minus 84,000. The difference will reduce our account, which is the creditors' reconciliation statement. Interesting, isn't it? Let's go to the last one. E. The bookkeeper of GP tool distributors insists that she preloaded an EFT payment of 420,000 for the 28th of February 2023 online on the online banking platform. On further investigation, it was found that the payment had indeed been successfully made. So we made a payment to them, but they did not record it. So we're going to go straight into the creditors reconciliation statement and subtract that payment. Oh my word, I missed D here. I missed D. Before I get to E, let me just go back to D. D says Adendorf Machinery Mart posted the purchase on the 15th to the credit side in error. So you just reverse that. All right, you just have to reverse that. They posted the purchase on the 15th to the credit side in error. Oh my word. So when we reverse this, we'll have to times it by 2 because they said it's a purchase. Okay. And since we are buying from them and to them we are a debtor that we're supposed to debit it, instead they credited it. So we're gonna debit it by the same amount. Let me see how much that is actually. They said it's on the 15th. So it's 256,000. They credited it instead of debiting it. So we're gonna debit the first time to correct the error and then debit again to make the correct entry because it was a purchase, right? We were buying on credit. Instead, they credited it. So we're going to debit it twice. Let's see if that is true. So you're going to take that 256,000 times it by 2, and you're going to increase our account by that. So when you debit it, you increase our account by 512,000. And obviously, I did discuss E earlier on. And that's it. That's all you were supposed to have done. It doesn't stop there. It goes to Part B. Part B, according to this, it gives us the debtors ledger of GP tool distributors, okay? And our debtor there is Builders Warehouse. And we are in February. So you need to understand the first part, which is December. Those are the debts that are more than 60 days. And January, those are the debts that are more than 30 days. And these are within 30 days over here. They just happened in the current month, okay? And according to what we have, oh, they want us to prepare what we call debtors age analysis of Builders Warehouse. So we need to figure out the age of how long, well, how long does Builders Warehouse, how long has Builders Warehouse been owing us? So for 60 days, what is the debt for 60 days? That is 60 days and more. What is how much will be 30 days or more? And how much is current, which is the debt that was taken in the current month of February. When you prepare the, actually, I will save this under the playlist written debtors age analysis. Just check lesson 1 where I explained how to prepare debtors age analysis. Okay. Now here, I'm going to start with the oldest debt first. How much were they owing? What is our oldest debt? They were owing 1,215,000. Then they paid 824,500. So that's what I will start with under 60 days. That's what I've got, okay, under 60 days. So basically they were owing us 390,500, right? I'm going to go back to that statement and look for a payment that they made, which will be a receipt. Okay, this is the payment that I see here. They made it in January, but remember, guys, the payment that is made by Builders Warehouse will go to the oldest debt. The oldest debt is that 390,500. So I'm going to take that 390,500 minus this 420,750. But because the payment is more than what the debt is, I'm going to limit it to 390,500. Whatever is left will go to the second oldest debt. So for the 60 days, it means that for 60 days, there is no debt at all. And whatever remains will go to the second oldest debt. But now, before I can even go to the second oldest debt, I need to figure out how much are they owing 30 days plus ago. All right. So I will take that 243,600 and subtract that 14,213, and then it will give me what they owe. Right. So I will simply take 243,600 minus 14,230. It will give me 229,317. And then I'm going to subtract the remainder of what remains from here. Remember, we paid 420,750. You minus that 390,500. We still have an extra payment that was not allocated. That extra payment will be allocated to the 30 days plus debt. That will be 30,250. So now they will be owing us 199,120. Now I'm going to look for anything that will reduce that debt, which is, in this case here, it will be the discount allowed of 8,415, and then it'll increase again by that debt of 679,815. So I will reduce this by the discount and then increase by the extra credit purchase of 679,850, which will take us to 870,550. Then I'm going to check if they made any payment. Now you'll realize that for debts that are greater or equal to 30 days, I don't have any more. The only thing I've got is this return here. So I'm going to go to those debts. Obviously, that is the first thing. It was made, that return was made on the 2nd of February. It can't be for February purchases. It has to be for January purchases. So I will subtract that for 30 days debt, 30 days plus debt. So I will simply subtract it from that 870,550, meaning that they will now be owing us 868,030. Then I'm going to go again and check if there's any payment. And according to there's a payment there. Should I allocate it to that 187,240? No, you have to allocate a payment to the oldest debt. So I'm going to go to the 30 days plus debt and subtract that 243,750. Now for the 30 days plus, they will be owing 624,250. None of the current debt was paid. Okay. So 78% of our total debt is 30 days plus. And note that that is a problem because we needed to pay our creditor, which is at the end of within 30 days. This could result in serious cash flow issues. Okay, the owner has studied the information in part A and B. We spoke about that together with an email he received from SARS and approached you for advice on the following issues. Despite the lucrative contract to supply Builders Warehouse after a 100% markup has been applied on the stock purchase from Island of Machinery Mart, GP tool distributors still experiences cash flow problems from time to time when they purchase stock. I told you. Now, analyze and comment on the liquidity cycle of GP tool distributors in relation to the debtors and creditors. Use figures, percentages of facts provided to substantiate your findings. Now, this is what I said here. GP tools distributors needs to repay its creditors within 30 days, but it takes more than 60 days to collect its descent. It means that GP Tools distributor has to pay its creditors before money is collected from debtors. And this, where do we get that money? I mean, we haven't collected anything from debtors. So what must we do? What must be done? We'll talk about it. GP tool distributor is owing 1,391,000, yet it is owed 811,520, of which 624,280 is 30 days overdue. That is 77%. Okay, no, I don't want to say overdue. I was supposed to say it's 30 days due because it's not really overdue because we give them 60 days to pay. Overdue, it's if it's outside what we allow them, outside the period we allow them to pay us back. Now it says GP Tools Distributors needs to pay 1,391,000 within 30 days, yet it might take more than 60 days to collect 811,520. In the meantime, this money is tied up in our debt. Where are we going to get it from? Yes, we're making 100% profit, but we need to talk to our creditor and organize something. Now, based on your findings in question 3.3.1, what advice do you have for the owner of GP tool distributors to improve the cash flow? Provide two suggestions. I said GP tools distributors must renegotiate credit terms with Adenoff Machinery Mart to be allowed to pay within 90 days and keep the debt debtors credit terms. So they don't have to change the credit terms that they have with the debtor, which is builders warehouse. Okay. This will enable them to collect money from debtors and be able to use that money collected to pay his creditors. Or they called GP tools distributors should consider selling goods for cash and keep its credit terms with Adendorf, that is Adenoff Machinery Mart. This may, however, result in less sales and therefore affecting its cash flow because Builders Warehouse might say, okay, if you want us to buy for cash, unfortunately, we can't buy from you. Remember, the main aim of selling goods on credit is because we want to take advantage of the customer's demands right now. Okay. For me, a better option is the first option. What do you think? Now, they say that the email the owner received from SARS stated that GP tool distributors should have registered for VAT months ago. The owner does not want to, claiming it is going to reduce his profit because he must now pay money to SARS. Provide the reason why SARS insists he should have registered for VAT already. Now, what I notice is that, guys, this guy is making money within 3 months. He made more than R1,000,000. And SARS wants you to register. It's compulsory for you to register if you generate a revenue or if you generate sales that are more than R1,000,000 per year. And this guy, which is GP Tools Distributor, they made that in 3 months. Now, GP Tools Distributed has generated sales over R1,000,000 in 60 days. Only 1,000,000 plus sales are required per annum to register for VAT compulsory registration. So that's why he's wrong. And then they say, explain why the owner's reasoning is incorrect and why registering as a VAT vendor does not reduce his profits. It's because, guys, when you include 15% onto your sales, that amount, that 15% will be paid by the final customer. So you're losing nothing at all. You still get your 100% profits. So GP tools distributors will include the VAT amount in the selling price of goods sold. This will result in VAT being paid by customers and user. GP will still maintain its profits. Any VAT that it pays on its purchases, it may claim it back from SARS. Okay. As I'm reading my solutions here, I was like, wow, did I just write that? These are 100% my answers. Basically, this is how I would have answered this question if I was to write this paper. Obviously, I hope I'm not wrong in any. So I only made a spelling error here. Any VAT that it pays on its purchases, it may claim it back from SARS. Okay, now that makes sense. All right. And that is it. Thank you guys for watching again. I really appreciate it. Please don't forget to like, share, and subscribe. Hustle.